Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Beko and my partner, Hari.
Hello.
Welcome to our podcast. Let's roll right through. Let's roll right. That was a horrible intro. All right, we'll just roll right through. All right, Hari, start us off with a disclaimer, please.
Yeah. This is the Value Investor TV podcast. We are a podcast that helps you understand the concepts behind value investing. If you, we are not your financial advisor. We don't know your specific financial situation. So if you need to make any financial decisions, please consult with the appropriate advisor before making an investment.
All right, let's get started. In this episode, we will talk about a request that came through one of our communication channels, and it is about our opinion, our take on this whole TikTok conversation and China-U.S. tense relationship that's been going around. That's been going on for a long time now. But we'll talk specifically about what this means for the tech industry, and we will also talk about what this means for us as value investors. All right, Hari, let's start off with your opinion about what's going on here with TikTok. I mean, most recently this week, I heard Oracle is now interested.
Yeah.
Like everyone is interested now. Microsoft started off the conversation. Twitter is getting in the action, and then now Oracle. What do you make of all this?
Yeah. So for those of you who are not really familiar with what's going on, a company called ByteDance has a platform, a micro video platform called TikTok, where people can upload 15-second videos that kind of have, whatever. And it's not really, it's a video only kind of platform. So almost everything there is, video based, very short, and the kind of the model here is that it's very addictive. Like people will, if you open up the app, it'll just start playing a video. And if you like it, you can, swipe and it'll, keep playing that video or, follow those topics. So the problem with it is that, so TikTok has, I think almost 1 billion users, has grown like crazy. And as far as I know, I don't know how they're monetized. But the company has servers in China, and the concern on the US side is that they are essentially just funneling user data to the Chinese government, because essentially any business that is owned in China is also owned by the Chinese government. And the concern is that as a U.S. Citizen, what is your privacy and protection? And I don't know that this is even limited to to China. The EU has very strict privacy laws. I would imagine a lot of these things apply there as well. So President Trump has determined that this is a security threat to the United States, and has said that TikTok cannot operate in the U.S. unless it is an independent business. And so companies are trying to line up to purchase it. Microsoft was one of their suitors, as Beko said, Oracle. And I've heard that the entire company is worth somewhere close to $75 billion, at one of their funding rounds. I don't know if that's higher now or lower after coronavirus, but, we're talking about a company that, I believe is profitable, but, you're paying very expensive price, for a business that has a very large user base. So, what does this mean for us? Well, first of all, ByteDance is not publicly traded, although they've been talking about, public access. But, from more of just like a, for the sake of argument, I think if we were to talk about this as if they were publicly traded, what would it mean for you as an investor? Should you sell your shares? Because if they split off, what do you get out of it? So it's hard to tell, if Microsoft or someone would pay cash, or if, how they would, how the U.S. assets would be separated. So my kind of take on this is that if I owned a company that is purchasing this, right, I don't know that there is that this is an asset that you can purchase that would be valuable, right? Because I think there is the part of this that is kind of difficult to understand for a lot of people is that when you run a company like this, when you have the founder, which is why we always push for companies to have, be run by their founders. The founder of ByteDance is somewhat of a, very visionary person, right? And if Microsoft or Oracle were to buy this, I don't know that they would have the capability, the insight. Oracle is a database company, right? They own some other things, but for the most part, I don't know how they're going to use this, and run this efficiently, right? And grow their user base. I mean, that's not their focus, right? Now, Twitter is much closer to that. Facebook is much closer to that. They certainly, the things that would come into play there is that antitrust laws may take into effect, and they wouldn't be able to purchase it, right? So Microsoft has LinkedIn. That's their only social platform. I just don't know, so.
Yeah, it sounds like you're questioning the synergy that could be generated when these companies purchase ByteDance.
Right.
Whether or not we have a synergy here or not. Because ultimately, when a big company acquires, or a company acquires any other company, there needs to be some synergy. The sum of the part needs to be greater than the whole.
I'll add to that, Berkshire Hathaway buys companies, but they essentially buy good businesses and then they leave the management intact, right? So, but you have to have somebody who's running it who is capable and will be able to successfully run the business. And I think that's the part where it's much more difficult, right? Is who's going to run this business?
Mm-hmm. So you brought up the questions. I'm not really familiar with the details of this deal, but you brought up the fact that one of the key kind of issues that was originated this firestorm was that ByteDance had servers in China, and therefore it could potentially infringe on personal privacy and things like that.
Yep.
If this organization is spun off and purchased by a U.S. company, does that mean that the server will be it'll be now located here in the U.S. and do you know the details of that?
Well, so one of the arguments ByteDance has a CEO that is they appointed recently that is U.S. based. But so part of the problem is that even if the servers are in the U.S., the thinking is that from a national security standpoint is that the U.S. operations would funnel the data back to their Chinese, conglomerate, right? So even though that it's collecting statistics and and data and demographics, think about it from this perspective. Let's say that you're operating a terrorist cell in the United States and you're using social media platforms to communicate with each other, right? If I subpoena the US server for that data, right, but that data is hidden or gone, in the, to a Chinese company, then I can't see it. I can't use it for law enforcement purposes, whatever, right? That's one part of it. The other part of it is that data is also being, mined and, processed. And now if the Chinese government has access to it, that the Chinese government may do, some sort of IP theft. They know that somebody who's a tech, person, they steal their password or whatever, and then they go and, use that to, blackmail them, whatever it is. Right. So I think that's kind of the thinking. I'm not super familiar with, all of the ins and outs of it, but if that's the mindset, then their process is move these servers away from, the United States, and then from China, and then sever any connection to the parent company so that data is not shared with the parent company at all.
Yeah.
And so now what you lose is, social media applications make their money when they have a very large footprint, right? So if you imagine that you're a US only based social media company, then you lose all of the benefits that there is a TikTok in the Middle East or TikTok in, you know, Southeast Asia or something like that, that you can't, cross the, the value. You can't have, one server farm. You're going to have two separate versions of everything.
Yeah, which actually brings me to very kind of tactical questions of how are they going to actually roll this out if you completely sever the servers and the user base and everything else, database, you sever that, and then you put it in a completely separate entity based in the US. I wonder how the software updates and all that is gonna work. Are they gonna do a hard fork, and then are they gonna have a separate version for the US and then something for the parent company or the ByteDance, and then I wonder what tactically how that's actually gonna work, because I think that can be very, very hairy, can turn very hairy very quickly, I think.
Yeah, and I think the this would not be the first time that a tech company bought an asset and just killed it, because of incompetence or inability to monetize it, and I think short form video like this, you have to be very careful about how you monetize it, because if you're running ads and so forth, you have to have some level of expertise to how to do that, right? And the companies that do that well are not Microsoft or Oracle. They are, Facebook, Google, Snapchat, those kind of businesses, Twitter. So, it's a very interesting problem, right? That I don't see how it's going to resolve itself.
Yeah. Maybe we can just, for the last couple of minutes of the podcast, we can talk about, why do you think that these companies are throwing their name into the ring and say, hey, look, I want to buy these companies, these, giant sort of dinosaurs in the tech world, that, even though they've only been around for a long time, because, it's such a fast pace in the tech world. You talk about Microsoft, you talk about Oracle. Why are they, why do they want to buy this?
Well, you look at all of these companies, and they have a very much a Me Too kind of strategy, where you look at Microsoft and, they were a software company, and then they decided, Amazon is killing it with EC2, so we'll make Azure, right? And so Azure is actually done very well. They've translated their expertise into a very successful platform.
Yep.
And that's and it's driving a lot of their profit now, right? That the Windows Office suite, kind of model is there, and it still generates money, but it's not nearly as it's the driver of growth for them. So I think there's parts of that. Oracle actually has adopted a cloud model too, where they host their databases for you in the cloud, and they have server farms, and they do all of that stuff too. So we're seeing companies evolve, and then they want to diversify their revenue base. And social media has been the new hotness, right? For the last, 2010 onward, the Facebooks, Snapchat, Twitter, all of those companies have, gotten nosebleed valuations based on that. And I think Facebook is really the one that's consistently, generating, very, very large, amounts of growth. Whereas Twitter, I don't think their user base is really growing anymore. But they're able to monetize their user base better than they used to. So, and I think they look at ByteDance as a, it's something that went from like 3 or 4 years ago, went from 0 to 1 billion users. And so they're just drooling over the ability to, serve ads to them, right?
It's kind of strange, yeah. I mean, because like to your point, anything when we talk about Microsoft, the only thing that's really consumer social media in that sphere is LinkedIn. Everything else is enterprise.
Right.
Same thing with Oracle. It's completely, to me, it's like I don't really see the value proposition of acquiring a very much consumer. And also, by the way, we're talking about a generation that's a lot younger who are using this platform.
Right.
And so for them, it's an old company that's targeting enterprise software, sort of old tech, trying to get into the new tech, the social media sort of platform. And I don't quite understand the synergy. And, perhaps it's because just my lack of understanding in the space. But it seems like, I feel like there's a big mismatch. If, for example, Twitter was trying to acquire this company, or Facebook, I think that would make more sense. But again, now with this scrutiny on this big tech companies for antitrust issues and things like that, I think that's going to be very hard to put their name out there into the ring for those companies too.
Right. And I think the other thing that, from a defensive position, a lot of these companies would want to, to purchase a company like ByteDance also to, or the US TikTok, to defensively keep Facebook and Twitter and so forth, down, right? If you think about it from that perspective, Snapchat is a very small percentage of the user base compared to Facebook, and Twitter is also relatively small compared to Facebook. So keeping a fourth player in the in the social media sphere can help Microsoft with leverage. Could help them with other aspects of it. And I think also there's a in my mind, the regulation is gonna be coming down pretty hard on the Facebooks of the world in the future, right? Because I feel like the regulation is there's bipartisan kind of frustration with the way how much control Facebook has over American discourse, right? And in a society with free speech, that is preserved in the Constitution, it's Facebook has become quote unquote the town square, right, where people would have a normal course of normal discourse. So trying to keep that out of the hands of one entity like a Google or a Facebook is important, right? But I mean, you can look at Facebook. Google tried to make a copy of Facebook with Google Plus, and it just didn't work, right? It didn't take off. So, I see it as social media has, it's a winner take all scenario. Like, you don't have multiple social media platforms. MySpace is gone, or for all practical purposes gone. It's really just Facebook now.
Yeah. It'll be interesting to see how this plays out. Right now, we're recording this podcast middle of August 22nd. So, we'll see how this unfolds. One of the things that's been another kind of interesting thing about this is that news organizations have been saying that this is going on sale, and I'm not quite understanding why. What's the reason for that? It's is it because the U.S. government is sort of like forcing them to sever this, and therefore this small organization is now for sale? Is it really like it's for sale, but is it on sale?
So I don't know I haven't seen any numbers thrown around in any of the articles I've read, but what I would say is that you have a deadline that I think Trump has put into place in like October. If it's not sold, then they may actually have to shut down operations. And so that puts a lot of pressure on the company to sell. And, one of the escape valves, is price, right? Is, if an Oracle or you've limited this to very few companies that can actually afford to purchase this, right? And so it's a Microsoft, Oracle, I don't know if Apple has looked at it as well, but the companies that are putting their money down here are going to be, relatively few number of businesses. And so they're going to actually have more leverage because, TikTok doesn't want to walk away with nothing, right? So they're going to have to come to a deal or else they lose everything. So I think that's where you would say it's on sale.
Yeah, I think it's going to be a fine balance, but also you kind of don't, I mean, yeah, it makes sense. It's a negotiation. It's a fine balance because you obviously don't want to, I mean, from Apple's perspective, or sorry, not Apple, Microsoft, Oracle's perspective, you kind of want to delay this as long as possible so you get the best price.
Yeah.
But also, if more suitors come in and they try to pitch ByteDance that, we can create synergy, blah, 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 you might lose the opportunity. So it's a fine balance. I think the deadline is coming up, in fact. It should be next month, sometime mid next month.
Yeah, I'm not exactly sure, but we're not talking a lot of time, and I don't know how long it takes to go through the regulatory, like the FTC, the Federal Trade Commission, to get through a deal. But the last thing I'll say on this point, and just before we wrap up the podcast, is that a company like this, you know, you when you have to sell your company because of some, you know, impending deadline, you no longer have nearly as much leverage, because the biggest leverage you have is being able to walk away, right? Is that the suitor that comes in, you know, enters into a deal, you just can't come to the terms and you have to walk away. If you know that you're you know, that you get nothing, then, you know, you're essentially showing your cards, right, as to what you have, right, what you want, how much you can get for it, all that stuff. And so,
Mm-hmm.
and then the last thing I'll say, the second, that was the second to last, this is the last thing I'll say, is that I'm not sure, because we haven't seen financials here, if private equity is in play in this kind of thing. And the reason I would say that is that private equity generally has to buy businesses that are profitable. And this is probably too expensive even for them, that even if they were to lever up and buy a company like this, they don't have the money to, you know, you put in a lot of debt to pay for it. But that means that, you know, you still have to monetize it in some way. And I don't know that they'd be able to, it's going to take some expertise to maximize the monetization here.
Yep. Yep. Sounds good. And then again, the timeline is quite tight here.
Yep.
So it's going to be interesting to see how this unfolds in a few weeks from now. All right. That brings us to the end of the podcast. Thanks everyone for joining us. And again, if you guys have questions like this, please feel free to send it to us via email, info@valueinvestor.org, or leave us comments on YouTube and whatever else, wherever you listen to our podcast. All right. Thanks again, guys. I'll see you guys in the next episode.
Thanks.